What's the difference now between a fund and a syndication? Is when you set up a real estate fund, you can have different assets. You can have a storage facility. You can have an apartment building. You can have a fourplex. You can have land development. You can have a triple net building, like those retail buildings. You can have residential flips. You can have wholesale. All this is under a real estate fund. It's like a mutual fund. And investors can come in, and now you can have as many as you want, and you can keep the fund running for as long as you want. For example, my real estate funds, I have a fund where people can invest as little as $25,000, as much as millions of dollars. The fund has been running since 2009. And I set it up not as an equity fund. I don't pay people from the upside. I met a lot of people that say, just pay me a steady income because I like steady income. I'm going to sell my business, or I'm going to sell this. I want a return. So I pay 6% fixed. A lot of people like the 8% steady return. I pay them twice a year. And what happens is they give me the money, I charge no fees. I don't charge them management fees. I don't charge them acquisition fees. I don't charge disposition fees. 0 fees. 8% pure coming to them. Now, if you take your money and you buy like a Jack-in-the-Box building or a Starbucks building, you're going to get 5% return. It's hassle-free. It's pretty good. Triple net. Like the tenant pays you the lease, net of tax, insurance, and maintenance. That tenant pays the tax, the insurance, maintenance, but 5% return. And when that tenant leaves, the building decreases in value because it's sitting vacant. But in my fund, they actually go in, and I'm telling you, you can set up the exact same thing. I'm not telling you to invest with me. I'm just telling you so you can understand the business model. So you can invest in something like this, or you can set up something like this, and people invest with you, and when they buy shares or units in your limited liability company, that's the fund filed with the Securities and Exchange Commission, you take the money and you can buy a building. You can buy one with Jack-in-the-Box. You can get a land. Like I have, we do 10 projects right now in Northport, Florida. Got the land, we're building 10 homes at a time. So don't come and tell me, Cherif, I don't have the money, would love to do this. The whole idea is if you don't have the money's out there. They need somebody to group them together and do it right. Don't tell me you're too young, don't tell me you're too tall, don't give me excuses. You can do it because you bring a team together. And I know you're thinking, but I can't afford the team. You can, because it's going to be a lot of money coming. And I teach you actually on that Saturday, the 29th. Why do I do a training? So you can understand the details. I'm trying to give you the 20% of the 20% of how it works. Because if you're already interested in real estate, if you're already trying to do deals and you've done at least one deal successful and you have a business model, set it up. Set it up with me or go set it up with an attorney. The difference is an attorney is going to tell you, you have to tell me what you want. I can't tell you because the attorney has a liability. But I tell you exactly how it is set up and structured. And people love the idea that their money is not secured by one asset, it's secured by many assets in the fund. And I tell investors, if you want to get out, you don't have to wait 5 to 7 years like other real estate syndications. This is an ongoing fund. At any time you can cash out. And the way they cash out, they send an email, and we have 12 months to actually cash them out. So there are ways to structure a real estate fund that will give you a tremendous advantage. And the upside is all yours. I've seen people, it transformed their life. So how does it benefit you and others? You help others invest passively in deals and transactions in their own backyards or in other parts of the country where you're diversified by location, by type of asset, and by style of investing. For example, I do deals in Old San Juan, Puerto Rico. I do deals in Northport, Florida, and I do deals in San Francisco. San Francisco assets are luxury homes. We buy them at $8-9 million a home. We spend $6 million, $7 million to fix them, make them nice. We sell them at 25 to 30 million. At that level, people come in with private jets. They don't know the economy going up, down, sideways. They don't care. Northport, Florida, they sell around $500,000. These are like popcorn. They come in from New York. Everybody's trying to actually Google it. You'll see Northport is the second fastest growing city in the US. So what if you actually raise the money and you don't have the time to go find the deals and deploy 5 million, 3 million, 2 million, whatever you raised? You can do joint venture with another real estate fund. Why do you think I teach people? Because I teach you, I set you up and I say, if you want to go raise capital for yourself and do the deals, great. If you raise capital, you want to do deals with me, I'm already doing them. You see, originally I never thought of this. I thought like I'm deploying my own money. I made a lot of money. I'm the largest owner of historic properties in Old San Juan, Puerto Rico. I made a lot of money on my own. But I realized that if I can help my students and I help people that I meet invest with me, whether by helping them set up their own fund and do joint ventures, their fund with my fund, or by showing them how to do it and they do it on their own and they grow as well, it's a great way. You create a bigger pie. So it benefits you because you grow bigger and faster in a shorter unit of time, and it helps others, and then it grows organically. Once you're set up, all I want you to do is raise capital from 5 people, just 5. You do it right, it becomes a habit. When I meet people, I don't tell them, I do this, I invest, I develop. I tell them I raise capital. What do I say? I raise capital. Oh, you raise capital for what? For real estate deals. Oh, how much do you pay? You see, it becomes now a conversational piece. And from conversation, it goes into a presentation, it goes into a pitch, and I close them. If I close them, they're interested, great. If not, I planted a seed, and maybe they tell me, you know, my sister is retiring, she has IRA money, etc. And they can self-direct that money into your fund.